Warren Buffett's 10 Rules for Financial Success. Are you ready to unlock the secrets of one of the wealthiest individuals on earth? Brace yourselves as we're diving into the mind of Warren Buffett, dissecting his 10 crucial rules for financial success. Stay tuned until the end, and you'll leave with a practical guide designed by a billionaire to create and grow wealth. The journey to financial wisdom starts now. Don't miss out. Rule number 1. Reinvest your profits. Buffett's first rule is straightforward. Reinvest your profits. In the early days of Buffett's partnership, he focused on using the profits to invest in other profitable businesses. By doing this, he expanded the partnership's earnings potential, and the effect of this compounding wealth is undeniably powerful. A famous anecdote from his life exemplifies this principle. When he was young, Buffett and a friend bought a pinball machine to put in a barbershop. With the money they earned, they bought more machines, and soon had a whole pinball machine business. They reinvested their profits, and this strategy formed the basis of Buffett's investment strategy. Buffett's approach to reinvesting profits isn't about chasing quick returns, but about fostering sustainable long-term growth. It's a strategy akin to planting a tree from a sapling, nurturing it, and eventually reaping the fruits it bears, only to plant more trees. If you consistently channel your profits back into your ventures or investments, you create a cycle that allows for compounded growth, and the potential expansion of your wealth becomes substantial over time. Rule number 2. Be willing to be different. Buffett's second rule is about courage and individuality. Be willing to be different. He often refers to the most important quality for an investor as temperament, not intellect. Being able to think independently and not being swayed by the crowd is vital. Buffett doesn't mind going against the tide. In fact, he prefers it, often saying, "Be fearful when others are greedy, and greedy when others are fearful." Indeed, being different can sometimes mean being alone, and that's perfectly fine. Buffett has always welcomed the solitude of his own thoughts, free from the noise of the crowd. This allows for clearer thinking, better decision-making, and stronger conviction. So embrace the solitude. Cultivate independent thought, and let your distinctiveness guide your journey to financial success. Rule number 3. Never succumb to fads. Rule number 3 is about discernment. Buffett is often warned about the dangers of jumping onto the latest fad or trend in the market. While fads might be alluring, the hype rarely equates to long-term financial stability. Buffett has remained disciplined, focusing on value investing principles. His advice is to stick to businesses you understand and believe have long-term value. In our era of rapidly shifting trends and the constant drive for novelty, Buffett's advice to resist fads is even more pertinent. With each new trend that emerges, it's important to step back, analyze, and determine whether it's a valuable, sustainable investment or just a fleeting trend. True financial wisdom often lies in the ability to differentiate between a genuine opportunity and a passing illusion. Rule number 4. Understand the businesses you invest in. Speaking of understanding businesses, this leads us to Buffett's 4th rule: understand the businesses you invest in. He adheres to the concept of circle of competence, referring to investing within one's area of expertise. Buffett's advice is to spend time learning about industries and companies, so that when the opportunity arises, you're well equipped to make informed investment decisions. Buffett's philosophy advocates for deep knowledge over surface understanding. It's not just about knowing the basics of a business, but delving deeper into their strategies, competitive environment, market trends, and financials. This level of understanding creates a solid foundation for investment decisions, mitigates risks, and enhances the probability of success. Rule number 5. Don't fear stock market downturns. Buffett's 5th rule for financial success is don't fear stock market downturns. In fact, he sees these downturns as opportunities to buy high-quality businesses at discounted prices. He once said, "Whether we're talking about stocks or socks, I like buying quality merchandise when it is marked down." Indeed, seeing the value of your investments plummet during market downturns can be daunting, but it's essential to remember that markets are cyclical. Downturns can provide golden opportunities to invest in quality businesses at bargain prices. Just as a skilled sailor uses the wind to steer the ship forward, a wise investor uses market downturns to their advantage. Rule number 6. Buy and hold. Moving on to the 6th rule, buy and hold. Buffett is a proponent of long-term investing. The Oracle of Omaha is known for his buy and hold strategy, which means buying solid businesses and holding onto them for a long time, often decades. His ability to resist short-term trends and focus on the long-term potential of his investments has been a key element to his success. The power of the buy and hold strategy lies in its simplicity and patience. It's like nurturing a garden. You plant the seeds, water them, and give them time to grow. You don't dig up the seeds every day to see if they're growing. In the same vein, once you invest in a solid business, have the patience to let your investments grow and resist the urge to frequently tinker with your portfolio. Rule number 7. Avoid debt. Buffett's seventh rule is to avoid debt. His often quoted wisdom goes, should you find yourself in a chronically leaking boat, energy devoted to changing vessels is likely to be a better bet than energy devoted to patching leaks. Put simply, getting into debt can be like being in a sinking boat. While leveraging can be a tool, Buffett has mostly shied away from debt, suggesting that investors keep their financial ship as tight as possible. Buffett's aversion to debt underscores the importance of financial prudence. Like a snowball rolling down a hill, debt can grow rapidly, becoming increasingly hard to manage. Therefore, living within one's means and maintaining a strong balance sheet becomes crucial. As Buffett advises, it's better to switch boats or make financial adjustments than to keep patching a leaking one. Rule number 8. Form healthy savings habits. Rule number 8 emphasizes forming healthy savings habits. Buffett is known to live well below his means. He resides in the same house he bought over 60 years ago and leads a modest lifestyle. Buffett's advice is to save first, then spend what's left, not the other way around. By making saving a habit, you can accumulate a significant corpus over time, which can then be invested wisely. When it comes to saving, the journey of 1,000 miles truly begins with a single step. Even if you start with small amounts, regular saving will eventually result in a substantial corpus. Cultivating this habit early can transform your financial health over time. Just as a small stream can carve a Grand Canyon, consistent saving can build substantial wealth. Rule number 9. Have a clear investment philosophy. Buffett's 9th rule is to have a clear investment philosophy. He's a proponent of value investing, buying shares of companies that appear underpriced by some form of fundamental analysis. He credits Benjamin Graham, his mentor, for this philosophy. By being clear about his investment strategy, Buffett has been able to consistently apply it throughout his career, leading to his unparalleled success. Having a clear investment philosophy is like having a compass in the world of investing. It guides your decisions, helps you stay on track, and prevents you from making impulsive, misguided choices. Buffett's value investing approach provides him with a framework to assess opportunities and make wise investment decisions, proving the power of a consistent and clear investment strategy. Rule number 10. Generate passive income. Finally, the 10th rule. Generate passive income. Buffett believes in creating multiple streams of income, especially in the power of passive income. This can include dividends from stocks, rental income from real estate, or royalties from a product. Creating sources of passive income not only provides financial security, but also allows one to earn money with minimal ongoing effort. The art of generating passive income is a cornerstone of financial independence. It's like setting a wheel in motion that keeps turning and generating wealth, even when you're not actively pushing it. This not only offers financial security, but also provides the freedom to pursue passions, interests, or even further investment opportunities. As you build these streams, you're building your own financial reservoir, steadily filling drop by drop, creating a path to enduring financial success. So there you have it, Warren Buffett's 10 rules for financial success. These aren't complex algorithms or secret strategies known only to the elite, but simple, common sense advice that anyone can follow. What makes these rules powerful is their potential effect when practiced consistently over time. It's a reminder that financial success isn't achieved overnight, but through years of discipline, patience, and learning. Remember, these rules are not a guarantee for success. They're a framework, a starting point. Everyone's financial journey is unique, and it's essential to do your research and perhaps seek advice from financial advisors before making significant financial decisions. Here's to your financial success, built on the wisdom from one of the most successful investors of all time, Warren Buffett.